Hello, my name is Brenda Hayward. Just to let you know, I am not an attorney, real estate agent, or tax accountant. This video will highlight some of the paperwork required when you decide to purchase a home on your own. This video is called Pre-Qualification Documents Needed to Buy a Home. This video will highlight additional information to your questions on what other paperwork may be needed and add it to your need to know list. Viewers, I hope you brought your notebook and pencil. Number one, proof of income and assets. Are you currently working? If so, you need proof of income and assets. If you plan on meeting with a loan officer to apply for a mortgage against the property you would like to buy, or you want to find out how much you could afford to purchase a house for, loan officers need these required documents to start the process. These forms will show the proof of income and the down payment to allow you to move forward with your home buying process. The pay stubs and other proof of employment if you work for yourself, bank statements at least 2 months, retirement account statement only if you've been using money as part of the down payment for closing costs, tax returns for the last 2 years, gift letters from whoever will be helping you purchase your home, or if you don't have a copy of your tax returns, a Form 4056T can be given to the loan officer who requests a copy of your taxes from the IRS. Two, proof of employment. Are you able to show proof of employment? Mortgage companies want to know the finer details, like how much you could get paid bi-weekly or monthly. This proof will enable the lender to see that you can make the payment consistently. They will base the mortgage pre-approval amount on your monthly income, minus the other mandatory bills that will be going out monthly that will continue after the purchase of your home. Mortgage companies tend to request copies of the W-2s, the 1099s, and may call each employer to verify the information. The same information will be re-verified a few days before the mortgage closing. Three, have you gathered all the information on your debts? Lenders tend to ask about all the debt you carry to ensure they determine what you can afford correctly. They do not want to see any debts go into default. Other purposes include marriage certificates, divorce decrees, paperwork showing the amount of spousal or child support that is owed or being given out monthly. Mortgage lenders also want to see student loan, monthly payment costs, car loans, or bankruptcy paperwork dated over the last 2 years. In some states, loan officers may prefer bankruptcy over a longer period of time. Four, credit report. Have you reviewed your credit report? A loan officer will ask for a copy of your credit report to see what debts are listed and what debts you have not listed on the list that you've given them. They also want to see your payment history and what collections are paid and partially or fully have been closed. Loan officers utilize the credit bureau information on your credit report to see what credit score you have generated with them. The higher the score, the better. The reason the lender pulls your credit report is to see the generated report score and how to tell them how you repay loans. You may not generally see a copy of your credit report unless you request a copy from the credit bureau yourself. Please do your homework because you need to know how much the upfront costs that are needed to be paid in order to complete your closing, which handles the transferring of property from the seller to you as a buyer. Just a little about me. I'm a person who enjoys food, and one of my favorite foods are cherry cheesecake. Please let me know if you like my video by clicking the thumbs up or leaving comments below. Five, do you know that you need to complete a pre-approval letter before you can start shopping for properties? Now is the time for you to start jumping up and down if you have just got an approval letter from the lender and start looking at properties that fit your home buying budget limit. The pre-approval letter comes after your income, debts, and credit score has been reviewed, and it states how much a lender would like to let you borrow. Remember, you can change your mind about what is right for you and spend monthly once you see the figure the loan officer comes up with. Over 50% of the buyers change their spending amount. They see the total funds towards a mortgage they are spending towards the new house. Do your homework and ask the lender what closing costs would be. I must let you know that most real estate agents wait until a receipt of the pre-approval letter before they do any walkthroughs of property. Even if you're going to pay off the house, they wait to see what is the spending limit to ensure the funds are available. 6, pre-qualification. Have you told yourself, I got pre-qualified online? This doesn't help me. Take a minute and read on while the pre-approval and pre-qualifications are said to be interchangeable, and they are not. Pre-qualified is when lenders have requested an online value overview of your financial backing, which includes the credit score, income, debts, and assets, without actual proof of verification. They do not verify the information until you have chosen the property. Pre-qualification is only a rough draft of how much income you could afford to purchase, or home you could afford to purchase, I'm sorry. You would receive a pre-qualification letter within a few minutes. The pre-approval letter from the loan officer is when the lender confirms some of the credit history and financial information. They will perform and pull a credit bureau file and complete full financial verification of your financials, using evidence from your W-2s and your bank statements. Because the pre-approval uses a hand-on approach and actually verifies some information. The pre-approval letter carries weight, carries more weight with the sellers and their agents. Remember, pre-qualification or pre-approvals are not a commitment to lend. There are several ways the loan may not make it to closing. For example, if you lose your job or if you build up additional debt before closing, the lender can refuse the loan on the home you want to purchase. 7, loan estimate. Have you received the loan estimate? This is a form from lenders that lets you know the amount you have qualified for after completing your financial picture on an applied loan. Or you can say it could be used as a cheat sheet that shows what you are committing to if you accept the loan terms. The paperwork is only a snapshot of the proposed loan if you go to closing. Some individuals at this point may decide the maximum cost of the house is out of their spending range and start reviewing homes at a lower price range and use current pre-approved amount as a limit if they change their minds. Please look at the paperwork and ask as many questions as you need before moving forward. After locating the property, you have the opportunity to ask for a written up for a 30-year or 15-year loan, along with the interest rate, monthly mortgage payments, estimated tax and insurance costs, estimated closing costs, along with the potential penalties. Please let me know if you like this video by clicking a thumbs up and leaving comments below. I share it and I hope you will share your comments and subscribe. Also, check out some of my other videos that may answer a few of your other questions you may have. My name is Brenda Hayward, and thanks for your time.